Hey everyone, in this video I'm going to highlight two cheap growth stocks you can buy now in October. Those two growth stocks are PayPal and Fiverr International. I'm going to go through why I think these two growth stocks are cheap and why I think you can buy them now in October. So let's jump right in, starting with valuation. Now, the metric I'm using here is the forward price to sales ratio, and you can see Fiverr International is selling at a forward PE of 11.18. That's the cheapest according to this metric this stock has traded for, arguably in the last year and a half. You could look back, it was trading at a forward PE above 20 at certain points. Similar with PayPal, which is trading at a forward price to earnings of 10.29. Again, this stock is cheaper than it's been going back a year and a half, according to this metric. Now, let's look at some of the reasons why the stock prices are down and why they're still a buy, in my opinion. So let's get into it with revenue. Now, looking at quarterly year-over-year revenue growth, you can see a significant slowdown for Fiverr International, which was growing revenue consistently over 30% and over 90% for one quarter, and now it's back down all the way to just 5.15% revenue growth. So certainly a significant slowdown in growth prospects would be weighing on valuation, and that's understandable. Similar with PayPal. PayPal was accelerating revenue growth all the way through 2021, reaching levels above 30% before decelerating consistently back down to 7.07% in its most recent quarter. Now, each of these two companies benefited during the pandemic when people were spending more time at home. PayPal benefited because it benefits when people shop online more often. That's when they use PayPal's login information more often to use PayPal to make a payment. And now that people are spending more time away from home and spending more money away from home, there's less occasion to use PayPal services. Fiverr similarly benefited when people were spending more time at home. Businesses were looking for tasks to be completed because most people were working from home. There was more available workers for businesses to search from to find work to be completed. Maybe people were doing side jobs in addition to their regular job because they had more time because they were already working from home. But now that people are spending more time away from home, that's causing a bit of a slowdown for Fiverr as well. In addition to the macroeconomic slowdown with businesses fearing an upcoming recession, they're hiring less workers, they're hiring less tasks, and they're going after less opportunities, and thereby lessening the demand to hire contract workers or gig workers the way that Fiverr benefits from. So the next thing I wanted to highlight is the operating profit margin. So while revenue growth rates have slowed down for each of these two growth stocks, you can see their profit margins are still healthy. PayPal, especially with an operating profit margin of 16.68%, has sustained this profit margin throughout its revenue growth slowdown. Meanwhile, Fiverr has managed to increase its operating profit margin. Even though it's still negative at negative 7.54%, it's making very good progress in expanding that margin, getting it closer to profitability. And finally, the last metric I'll highlight is the cash flow from operations. And again, with Fiverr, it's a similar story with cash flow from operations increasing, even though revenue growth has been slowing all the way up to 13.86%. With PayPal, this is a bit of a troubling statistic because you can see its cash flow from operations to sales is down from over 24% down to 15.11%. So like I mentioned, there are plenty of reasons why these two growth stocks are down significantly, right? There's always a reason why stock prices fall. And those reasons could be justified for PayPal and Fiverr. However, in my opinion, the sell-off is overdone. The selling is overdone. And now this is an opportunity to buy these two cheap growth stocks now in October.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.